Welcome back. Rob Kaplan, founder and partner at Kaplan, Vogler, Cunningham and Frank. I am yet again here with Ray Davis, Chief Business Development Officer at Red Oak Capital Group. Last installment, Ray, we talked about the process of putting the offering together.
Sure.
Now let's talk about the conduct of the initial offering, how that went down, how did we create market acceptance, what was the role of the managing broker dealer, and what support was really needed there, what people can expect if they really want to go after this market.
Our approach to the market is vastly different than most folks' approach. Our approach to the market is very operational driven. So when we talk about marketing, we're very focused on operations. Actually, we have no salesmen. So when I'm not doing what I'm doing, which is almost a full-time, I'm on the road working with our key representatives. I have a partner, Kevin Kennedy, who's an amazing human being, an ex-BlackRock director. He's on the road full-time, but he's a partner as well. So you've got two partners in the firm, our managing broker dealer, which I'll get to in a minute, and we have one internal. So as far as a sales staff goes, we're probably the smallest sales staff in the industry, or one of the smallest sales staffs in the industry, and we're raising typically what an 11 or 12 person sales organization would raise on a monthly basis. So we look at the market and we say, so how is this possible? When you look at the operations of any organization, I've already told you our broker dealers were instrumental in developing our product. Our focus has always been you drive operations, and with operational excellence that will drive sales, So it seems easy in concept, but so how do you get that message across? So our approach is, there's only two of us, is we start by doing due diligence events almost on a monthly basis. And our due diligence event, I wouldn't classify it as fun. It's, we bring folks in, we usually have dinner. It's not a late night, there's not a lot of alcohol. And then we have a 7-hour classroom setting due diligence session where we go through every single swim lane, every major swim lane of the company. And we do a deep dive of, hey, this is how this operating unit operates, here's what they do, here's how we're transparent to our investors. So we have this due diligence approach that's very institutional. And we get this often, they say, so what's the goal of the due diligence event? And everybody thinks the goal of the due diligence event is to get a selling agreement, which is the vehicle you need to sell in the independent broker-dealer channel, RA channel. But that's not our goal at all. Our goal is, hey, you've now had a chance to meet every principal, examine every swim lane, including the swim lanes you're most interested in. And we call that your beginning point to start due diligence on the firm. And it seems almost counterintuitive. You've spent 7 hours with them, that we then give them a share file that could be 4,000 to 10,000 documents. And the goal here is to not, let's get a selling agreement and start selling. The goal here is to have them deeply examine the company and to start watching the company to prepare to be what part of our selling group. And one piece that's unique about that is you hear about transparency. Well, our transparency is robust. It's institutional transparency. We provide all reporting 3 days to our broker dealers and to our reps prior to our investors receiving reports. We actually allow our due diligence officers to come in unannounced. We actually stroke a check for their flight and to come in and do a due diligence inspection at any given moment. So how does this relate to marketing? So we drive operational excellence, we drive transparency to what we consider a very high level, and we're saying, look, not that we're not going to make a mistake, but when we make a mistake, we've got ways to mitigate the mistakes and have corrective actions. So when you take the due diligence, when you take the transparency, and when you design mitigating risk vehicles into your offering circular, that whole combination builds a sense of confidence. And remember, we're not asking for the sale, right? So we're at this point, we're still saying do due diligence on us. So when you take all of those things, it builds a level of confidence within the broker-dealer channel. And if you have those key reps and due diligence officers, and you've allowed them to experience all this without trying to sell them, that's 100% how we've driven the market. So no salesman driving it reverse.
Right, and it's a very important point to make, I think, because You know, we were talking about this at dinner last night. When we first started working with Regulation A and working to develop the market, I think we saw a lot of issuers out there that, you know, really saw Regulation A as was going to be a panacea for all kinds of marketing efforts and expenses and what have you. If it was, just to use something that's analogous to Red Oak, a developer of real estate-based financial products. You know, the view was, great, with Regulation A, I can put this up on social media and people will flock to me. And here's the reality, is that if we're not dealing with traded products in proprietary Salesforce houses that are really focused on market making and trading activities, then you have got to educate the distribution community and you've got to educate the investing community on who you are before you put the offering out. There is a lot of noise out there.
Yes.
And so when that financial professional is trying to decide which bond product they need to look at, there's going to be all kinds of products that have a market competitive rate of interest associated with it, and it's got an indenture, and da-da-da-da-da. The real core of the matter is, who is the sponsor? Who am I investing the money in, and what is their business like? And to the extent that the due diligence officer, and in turn the registered rep or the registered investment advisor, is confident that they know the ins and outs of this issuer, that is the product they're going to pick off the shelf. So it's just, there will never be a replacement for good old-fashioned educating the marketplace.
We love the independent broker-dealer channel. We want to educate. I think trying to take a Reg A to market, no matter what it is, without some vehicle or tool to educate the market, I think your chances of high level of success that we've been fortunate enough to have, knock on wood, that we've been fortunate enough to have, I think I don't see how it's possible.
Yeah.
I'd like to see somebody do it, because in my head I just can't grasp it without providing that level of education.
Yeah, I think it's, you know, you do have your exceptions out there. So you do have, you know, very sort of high profile or sexy tech startups that, you know, they are targeting a certain demographic that wants to say that they've invested in some of those things at very small amounts. You know, I do think there are situations like, we're seeing a little bit of this now, microbreweries who are, you know, raising capital amongst their loyal customers. But that's a very different investment priority at the end of the day than when you're talking about the vast majority of companies that are, you know, either providing investment products or, you know, whatever, a distribution company, a manufacturing company, all that. You really have to have a base knowledge in that professional community that the investor can have confidence in at the end of the day.
Absolutely. So what you're referring to there, I call it amateur venture capital, amateur equity. And these are folks playing around in those markets who may be investing some dollars to some degree. You know, Kevin, my partner, he says, look, we're not going to make you rich, we're going to keep you rich. And I think it's a wonderful saying. And it's because of all the risk and all the mitigating factors. When you're looking at the tech offerings, the microbreweries or manufacturing, you're playing in a different risk profile. So if you're Mr. Jones or Mrs. Smith investing in some public offering or some crowd offering or what have you, I would hope that you're putting in a very small amount of money to protect yourself, because you have no earthly idea what's really happening underneath the company.
We talked about the role of the managing broker-dealer and the law firm in planning and preparing the offering. Let's talk about your experience and the roles of your MBD and law firm in the conduct of the offering and what's critical there for the issuer.
I think the conduct of the offering, well, from the managing broker-dealer perspective, so if you look at their primary role, which is really compliance to some degree and distribution to some degree. It's not a captive offering, but it's compliance and distribution. Our managing broker-dealer, I mean, the firm is just built on these core ethics of getting down and doing, whatever is necessary. So I think of them in very much a extended distribution fashion, right? I think, hey, they're going to expand our distribution group. And they do that a couple different ways. They do that by saying, look, does the due diligence meet a certain standard outside of the legal standard that you would be required to have us hit with the SEC? And then they also expose us to new channels of distribution within the broker-dealer channel RIA market. And that, I would say, we've got one of the best managing broker-dealers. Their marketing budget is very reasonable. Their fee structure is very reasonable. It's a contributing factor to our success, and I think a very important one. Your role, our law firm's role, it's really twofold. It's one, the primary role, in my opinion, is making sure we're doing something today that doesn't create a huge mistake down the road. And I've seen this happen, doing this as many times as I've done it. I've seen first offerings, second offerings, or a change in AUM or capital market strategy that has absolutely destroyed a company. I'm going to go to the crowdfunding platform or the Reg A where I'm advertising from a public perspective. I think having a law firm that can guide you and help you with the structurings, not only what you're trying to accomplish from a problem-solving perspective, but one that can also guide you and say, hey, this thing can be built on in these various fashions to accomplish other objectives, more dollars in the ground, etc. I think all of those things are absolutely critical. And I know we've mentioned them a couple times. I don't think they can be mentioned enough. Because if your core offerings aren't built correctly, one, either the early adopters of your offering get penalized, which is often the case in first or second offerings, or you don't have a base capital platform to build on. And when I look at that, Rob, you see this happen all the time. You see young startup companies outside of the broker-dealer channel. What happens when they're taking angel or venture capital or those first couple level of capitals? I see it all the time. Those level of capitals come in and they put restrictive covenants on them, or they have control features that absolutely prohibit their growth. So when I look at what you've done for us, sure, you've taken some very unique ideas and made them work, but you help protect us in those areas that may be 5 years down the road, those same areas. So to me, I think those are critical functions if you plan on growing a multi-million-dollar company or into the hundreds of millions where we've been fortunate enough to go to.
Yeah, I think a capital plan orientation versus a transactional orientation for the law firm is extremely important in order to help you analyze the issues. I think it's just as important, again, going back to a point from the other installment, having a group that is steeped in this kind of practice really helps, not just from the standpoint of the legal experience, but we are seeing any sort of variations on a theme of issues or problems that an issuer may face, that we can provide unique perspectives to the client. The client, quite understandably, is in their channel focused on their specific situation. With the right lawyer, the lawyer will understand the issues as you perceive them, but may say, well, have you thought about it this way? Because we've experienced this issue, and maybe providing a different perspective.
Absolutely. And for the audience, I'd like to add a little color. So Red Oak is a lender, and this isn't so much about what we do, but we're a commercial real estate lender. And if you look at the buckets of capital, there's what's referred to in the marketplace as hard money, very expensive. There's transitional capital or bridge capital, which is what Red Oak does. And then there's what I would consider like bank plus capital. And then there's permanent financing, LIBOR plus. So from the onset, Red Oak's goal has to always cover the whole gamut of lending products.
Right. With
our last one being a joint venture with an insurance company, which you and I are exploring now. If those first offerings weren't set up right, or if we didn't have the ability to do that long-term planning in advance, knowing some of the challenges that are going to come, and it's literally your experience, because some of them were new for me.
Right.
It'd be great to say, oh, I knew it all. Not even close, right? Between my partners and between the expertise at your firm, we're accomplishing these goals in a very rapid manner. We may not be a multi-billion-dollar group yet, and we're taking our time growing, but knowing that we have planned for all those pieces, and you've given us options. And I don't know that it's important to go into this series, but we've got 4 different ways to pivot if the market pivots.
Right.
So I think those pieces that you guys have brought from a legal perspective, Rob, are valuable, absolutely valuable. There's the the cost perspective, right? We're at 25% of the market of cost, all in to raise $50 million. So if we spend $500,000, everybody else is spending $2 million. You can adjust those numbers up and down. So you say, is it a failure? Well, you may be able to raise the $50 million, but if it cost you $2.2 million instead of $400,000, to me, I'm not going to say you're not a failure, but there was a more efficient way to do it, which benefits the end investors, which benefits your distribution channel, and ultimately, if management does its job executing on its thesis, it benefits management.
Just speaking to the initial offering, what lessons do you feel were learned in that process?
The most important piece was, I thought, okay, I know the distribution channel. I've raised a significant amount of money very easily. I never fully understood how important you all could be to us. And I don't mean the execution of the Reg A, excellence there on your part. It was your role in acting, I don't want to say as a general counsel. You guys were helping with business issues or helping us define business issues that came up and helping us have the full color before a decision was made. So your firm's excellent. The whole Reg A piece, excellent. Nothing to complain about. But the piece I would say where there was this greatest level of learning was, one, you need an expansive team, and having the right law firm, and it may not be your firm, it could be anybody's firm, but the firm that have business attorneys in there that can help you grow through some of those issues, that to me is critical. And I can definitively say we wouldn't be here now without that advisory work, by the way, that you didn't charge us for. So that was really the biggest lesson is count on your friends, right?
Yeah, that's great. Well, thanks for joining us again. And if you have questions, contact information for myself is below, and hope all of this is helpful. See you soon.